but Deepali Pant Joshi, former executive director at the RBI, also with us. Deepali, many thanks for joining us. Persistent non-compliance, that is what the Reserve Bank has stated in its order. Deepali, what do you make of the order that's coming from the Reserve Bank, and more importantly, the implications for Paytm Payments Bank?
Well, Shireen, this was a disaster which was in the making since October 23. In October 23, Shireen, you will recall that they were fined 5.39 crores, but they were very blazed about the reasons. And for every regulator, Shireen, all over the world, it is a great concern if certain limits are breached, if KYC is not being complied with the people to whom you're offering payout services, and then these payout transactions were not at all looked at, no risk profiling of the clients as required internationally and as stressed by the RBI was done. Now the question arises that why now, why suddenly? Well, very clearly, there was a system audit report. Now, all system audit reports are not whimsically looked at. There is an external validation of that system audit report. And that, Shireen, sadly disclosed that the same things, there was a recurring pattern. Customers were being onboarded, KYC was not being looked at, and there was persistent non-compliance. So what was the regulator to do? Why would the regulator turn a Nelson's eye to this? And this will have it is expected, will have a demonstration effect on this kind of cowboy style of working, disregarding the diktat of the regulator. So this is a stern action, and it was merited. I'm sorry to say that Paytm took no cognizance of all the warnings which were given to it several times, and it was explained to it at length. Paytm officials were in touch with the RBI, my RBI colleagues. But then if you persist, then there has to be a thus far and no further state. And that's exactly where they've landed. I'm very glad that your anchor explained clearly what can and cannot be done. But as Lata also pointed out, it would be foolish to now make deposits in this account because it has been relegated to a state not even of narrow banking, it's gone beyond narrow banking. It's a clear signal from the regulator that, all right, whatever interest payments have to be made, we cannot deny as regulators, and those will be allowed. So wallets, FASTags, NMC cards, etc., till you have time till the 29th of February. But any cashback, any refunds which are due to you, would be duly processed and paid to you. But after that, quite simply, no, nothing's happening. And there is a very strict line of action which the RBI has adopted for all NBFCs, for all payment banks, so that it is hoped that they would learn from quite simply, it is an example which has been made out of Paytm, that if you did not wake up when so many signals were sent to you, then this action is fully merited and justified, and regulators all over the world would say, yes, of course, the RBI had to do something. The RBI could not just sit back if you're not looking at the KYC, you're not doing any risk profiling. It's business as usual for you. Well, it's not business as usual for the RBI.
Deepali, I just wanted to know, that's what investors in 197 will want to know. Is this a point of no return? Can the company say that we will do X, Y, and Z, and maybe after 2 months, something returns? Or do you think the record that after 22 months of supervision, the regulator comes with an even more drastic action, so it is actually end of the road? How should we read it as investors?
No. It is not exactly the end of the road. One cannot really prophesy whether it is or is not, because it depends on the compliance which the company is going to tender now. Now the company is going to go back and say that, yes, we will have another system audit and we will plug if I was part of the company, I would say that we will plug the very obvious loopholes which you have pointed out. And these are inadvertent omissions. We have not vertently tried to, how shall I put it, not vertently tried to compromise the integrity of the financial system or of the payment systems of which we are an integral part. And we would And if it was 197, they should plead that, there are so many customers using this service. It is the fulcrum of digital India and so on and so forth. As for our errors of omission and commission, RBI may give us a chance and we would prove that we are quite capable and we have the systems in place for risk profiling of customers. And this is not all customers, but yes, we do accept that in some cases where payout services were extended, we did not do the risk profiling because that is there in black and white. The insufficiency of the infirmity of their systems audit report with the external validation is something which is incontestable because it is there in B&W. So what they should really do is work on these lines and essentially rectify it, not act in the blaze manner they did after October 23. And then I'm sure the regulator is ultimately reasonable, but the regulator is a responsible regulator and cannot. I mean, if you keep flouting every regulation, then of course you have a problem. You will agree, Lata, that there is a problem, a systemic issue which needs to be plugged. And has taken all steps to solve.
Well, that is what the RBI's order. That's what the RBI's order states, that it is a persistent issue of non-compliance, and which is why the RBI has acted. But as Deepali Joshi is pointing out, we will have to wait to see how the company responds to this, and of course, then how the regulator decides to respond to Paytm and 197's communication in dealing with this order. Deepali Joshi, always a pleasure. Many thanks for joining us this evening to take us through what you make of the RBI's order on Paytm Payments Bank. Well,